Welcome to the Life and Real Estate Homebuyer Webinar with your host, Joshua Shorter. Thank you so much for tuning in. Stay tuned and get ready for great value-driven content. Hey everybody, welcome back to Life and Real Estate, and today we have Kyle Williams. He's a loan officer with Guild Mortgage here in Las Vegas, and what we want to do is provide you with some great value. We want you to walk away from this being able to be informed, feeling empowered, and feeling confident as a home buyer, knowing and understanding, all the common frequently asked questions regarding lending. There's a lot of misconceptions out there, regarding lending, and what we want to do is provide clarity to you in the process so that you know exactly, what to expect, so that you are aware of what requirements are, in the process of lending. And in addition, we want to kind of debunk, some of the misconceptions out there and give you the truth about lending so that, you can go into it feeling great and prayerfully stepping into that new home of your dreams. So, Kyle, thank you so much for being on today. I really appreciate you joining me. And this is an exciting project. We've talked about it for a while, and it's exciting to be doing it because I know that it's going to provide great value to our audience. And so we're going to jump right into it. The first question that I have for Kyle is, what is the difference between, pre-qualification and pre-approval?
Yeah, that's a great question. So when we go through and we do the verbal application, then we pull credit and we get all of your numbers just verbally. And if everything looks good, then at that point you're pre-qualified. But once we go through and we back up that verbal application with physical documents like bank statements, pay stubs, then at that point you're pre-approved, and then we'll give that pre-approval letter to your agent and send them out to go in and get house hunting and get under contract.
Excellent. So you're saying that pre-approval letter is kind of what gives you, some purchasing power, in that whole process, and kind of almost, validates you as a buyer, in the eyes of all the sellers that are out there. It really, what you're saying is it kind of lets sellers know that you're very serious as a buyer and that you're ready, for a real estate transaction. So that's awesome, Kyle. Thank you so much for that answer. We really appreciate the clarity there. Another, commonly asked question is, how long, does a pre-approval last, once you are pre-approved?
Mm-hmm. Yeah, that's a great question. So when we go through and we pull credit, your credit report is good for 4 months. So we need to have you get under contract in 3 months. So that gives us 30 days to close. And if it does get past that point, it's no problem. All we do is we go through and we re-pull credit and just get some updated documents.
Excellent. Oh, that's fantastic. I was wondering about that because I just, I didn't know if it was, this is only a 60-day thing, a 90-day thing, or is it only 6 months, or next year do I have to, do it again? So I really appreciate you providing clarity on that as well. And I've heard different, terms thrown out there, hard pull, soft pull. What's the difference between the two, and how can you use each to kind of, help different situations for buyers?
Exactly, and that's a great question. So what'll happen is when a buyer is confident, they're ready to pull the trigger and purchase a home, right? Then we go through, we'll typically do that hard pull because we need to have that hard pull to be able to issue out the pre-approval.
Gotcha.
Now, if a borrower is kind of indifferent and just kind of, looking to see what they can get pre-approved for, then we can go through and we can do that soft pull, right? And that does no derogatory, it doesn't harm their credit whatsoever.
Wow.
But yeah, and that'll go through, that'll list out all our debts, that'll let us know, what we need to know as a lender to be able to get them pre-approved.
That is excellent because, I've always, kind of been under that misconception that, if I have my credit pulled, that it's going to count against me every time, So, and I know that there may be tons of people out there who, have that same question and maybe been wondering, is my credit going to be affected, if if I do a pool. And you know, Kyle is really providing us with some great insight here, because again, it just tears down, you know, a lot of the misconceptions in people's minds about lending. And I think sometimes because you have those mental barriers, you know, you may be hesitant to actually step forward and start that process of buying a home. You know, a lot of times we're limited by our own you know, preconceived notions. And so it's just, that's great to know. I really appreciate you, you know, giving us the truth about hard pulls and soft pulls. When it comes to, you know, other misconceptions, you know, around lending, what are some of the other, you know, top misconceptions that people have, you know, when it comes to lending? Oh yeah.
So the biggest misconception that I personally ran into is people think that they need to have 20% down and a 780 credit score, right? Where that's not the case. I mean, we have so many different down payment assistance options to where you guys can get help from the government. It's essentially, if you stay in the property for 3 years, it's free money is all it is. You don't have to pay any of it back. And especially right now in today's market, it makes sense all day long, because we can go through, we can pair those down payment assistance programs with seller paid closing costs when you go through and you write your offer, to where you can come in with very little to nothing out of pocket. And that's one of the biggest things, is people will go through and they're terrified because they feel like they don't have enough funds or whatever that is. But in reality, we've helped people to where their total out of pocket when purchasing a home was less than what it would be for them to rent, where they go through, they have to put down their first, last, and security deposit.
Wow.
Right?
That's incredible, you know, because I always, you know, had this in my mind that you got to have $20,000 or, you know, $10,000 to put in, you know, have all this huge savings account, you know, set aside just to be able to, you know, get into a situation where you can get a home. Well, you're saying that those barriers aren't as tough as people really make them out to be in their minds.
Exactly. In fact, I have a buyer that's under contract right now. Their total out of pocket's $500, and that's it, out the door.
Do you hear this?
Yeah.
This is amazing. See, and I'm so glad that we brought you on today, because, you know, this is the type of content, this is the type of information that people really need to know. You know, when it comes to, you know, the home buying process, you know, people don't even think to move forward because they just don't think that they would even qualify, you know. And I hope that someone out there is watching is taking on a new level of confidence, you know, that with this new information, you're empowered, you know, as a buyer, and understand, you know, what you can and can't do. So when it comes to, you know, credit scores, you know, that's another barrier that, you know, people often have. It's something that many feel limited by, and, you know, they don't always understand, you know, what is the minimum requirement for, you know, for certain, you know, types of properties, and you know, the different types of loans that are out there. What's the lowest score that somebody can have, you know, for an FHA loan?
So technically, the lowest score is going to be 0 that we can get them approved. So I mean, a lot of times, especially with the older generation, they deal strictly with cash, right? Like, they don't have any sort of credit, haven't had credit for years, and that's totally fine. We can go through and we can get alternative trade lines. So for example, like if they have an insurance that they pay, right? Health insurance they pay monthly, a utility bill that they pay monthly. We can go through, we get 12 months of history of that, and we can basically use that as documented credit, right? Even though they don't have a score. But I mean, right now our minimum credit scores for FHA is going to be 600, and the minimum for conventional is going to be at 620. But there are certain circumstances to where we can get them approved under a 600 credit score.
Oh, that's excellent. That's great to know. And you know, I came across, you know, someone this week who, you know, was around. You know, they said that they had been checking, you know, their credit score, and they were, you know, somewhere around 640. They didn't know that they, you know, were qualified. You know, in their mind, they were thinking that they weren't qualified, But in actuality, they actually do meet the criteria for certain loan programs. So again, that's why we want to provide you with this information, so that you are aware of the options that you have out there. And I know that there are other loan types as well, and wanted to ask for you to speak to those. Could you tell us about the lowest score for VA as well?
Yep, lowest score for VA is again at the 600, right? And now with those VA and those FHA loans, they're government products, right? And they're amazing to where if you have over a 640, it doesn't matter if you're at a 640 or an 840, your interest rate's going to stay the exact same, and it's going to be phenomenally low. So right now, for example, FHA and VA, you're going to be looking at a 2.5% if you're over a 640.
Wow, no, that's a 2.5% interest rate.
Yep.
Wow. Now, could you speak to that? I don't know if people really understand the difference. In the grand scheme of things, when it comes to 30-year mortgage or a 15-year mortgage, how much of a difference a 4% interest rate loan makes versus a 2.5%. Could you speak to that a little bit?
Yeah, of course. So the interest basically is going to be the difference in your monthly payment. For example, if you have a 4% interest on a $250,000 house, your payment, you're probably looking around, $1,500 to $1,600. Where if you have that same property, the exact same payment, but in today's market, your payment's looking around, $1,350. So that saves you, $150 to $200 a month. Times it by 12, times it by 30, that's,
wow, that's a number that
thousands of dollars. Yeah.
That's excellent. Oh, that's a lot of savings. Over a 30-year period, over a 15-year period, saving $150 to $200 a month, and each month for 15, 30 years, that's a lot of money you can keep in your pocket. So I think that's why a lot of people are really taking advantage, of these incredibly low interest rates right now. And so that's something that I found very valuable, that I wanted to make sure that our audience also understood. And when it comes to other programs out there, I've heard that there are programs available for specific professions, maybe dentists or teachers or lawyers. Could you just kind of shed some light on some of those programs as well?
Of course. So our profession programs typically are stemming towards teachers. So if you're licensed K through 12 in Clark County, then right now interest rate's at a 2.25%. And you get $7,500 in down payment assistance, so you go towards your down payment or closing costs.
You said $7,500 in down payment assistance?
Yep.
Wow.
And if you stay in the property for 5 years, you don't have to pay a cent of it back, which is
phenomenal.
Yeah.
That's phenomenal. Who wouldn't want $7,500 towards closing costs and a 2.25% interest rate?
Yeah, 2.25.
That's incredible. So if you're a Clark County teacher, and you're out there and you're watching this, definitely give me a call today. Get in touch with us. What we'll do is we can get you started in the process to see what you would qualify for. And, after qualifying, you'd work with me and we'd help you find the home of your dreams. So, in addition to that, there's the aspect of maybe being a business owner, or maybe being someone who is self-employed. There are a lot of entrepreneurs out there, especially in the Las Vegas Valley.
Yeah.
And could you shed some light on how a business person or an entrepreneur or someone who is self-employed might obtain financing for a loan?
Of course. Now, COVID did come through and basically just run a whirlwind through the mortgage industry. So it changed up a lot of things. Now, currently, as it sits, if you are self-employed, we get 2 years of taxes, right, of self-employment taxes. So, and then from that point, we can only base your numbers off of what you claim. So it's not necessarily what you make, because a lot of people will go through and they'll make $100,000 and they'll only claim $50,000, and we can only base our numbers and give you your income based off of that $50,000. So keep that in mind if you're a self-employed owner, or if you're self-employed and you're looking to purchase a house in the future, then we can only go off of what you claim. Now, along with that, we also have to get a year-to-date profit and loss statement that will show us, your net earnings, and then we have to back up the amount of income that we're using for the self-employment with bank statements. So we have to show that even throughout COVID, there's still those deposits into that account that back up those earnings that we're trying to give.
Very nice. Well, thank you so much for providing that type of information, because for me, as a real estate agent, I am, I'm a business owner.
Yeah.
I'm self-employed. I'm an independent, contractor, and for other agents out there, or for any business, any small business owner out there, who is needing assistance with getting started, in the process. And if you're out there and you're not exactly sure what that process entails, again, you can always reach out to us. We're certainly glad to help you in the process. As far as shopping around with different lenders, is that something that actually hurts your score? Like, can you have multiple checks? Is there a certain time period where you can have maybe multiple inquiries and it not count against you? How does that work?
Yeah, that's a great question. So once you go through and do decide to go through with that hard pull, that first pull, that counts as a hard inquiry. But you have about a 3 to 4 week grace period to where if you are shopping for like services, right? So shopping for a mortgage, then you can go through and you can get it pulled again, and that second one is not going to bring down your score. It's going to be the exact same score that was pulled the first time.
Excellent. Oh, that's great to know, because it's a lot of people want to shop around from time to time and just kind of see who's the best fit, who can best assist me when it comes to this, or am I getting the best rate, or things the way that you want them. So that's something that definitely empowers the buyer out there. And when it comes to working with a lender, in your experience, what do you think are some great things that a good lender will do for you? How does that interaction between the lender and the buyer and the agent work?
Yeah, no, and that's a great question. Now, one thing that I'm very proud to be able to sit up here and say is that I've never told anybody no. And that's a big, it's a bold statement, but that's one of the biggest things, first time buyers or just home buyers in general are afraid of, is they're afraid of rejection, right? Now, don't get me wrong, I have said not yet, right? But at that point, I'll go through and, put you on the path, lay out the groundwork, show you the steps that you're going to need to do to be able to get into your dream home, right? And we'll, figure out that criteria up front, and then at that point, we'll be able to let you know exactly what you'll need to do to be able to get there, right?
Excellent.
So that's a biggie. The next one's going to be communication. You want to make sure that you and your buyer and your agent are all on the same page, right? Everybody needs to be kept in the loop, and that's the one thing that I've seen cause issues in this business is lack of communication. It causes a lot of frustration.
I think in general in life, period, lack of communication just creates a lot of problems. So no, I didn't catch up, but go ahead.
No. It's very true. And then I know just for a fact over at Guild we have very minimal overlays. And basically what an overlay is it's a rule on top of a rule. Now, a lot of people don't know this, but VA, FHA, conventional, they all have their rules. And each mortgage company will go through and they'll say, okay, that's great, that's their rule, but here's our rule. And I know a lot of the bigger banks, when COVID hit, they basically changed their credit score guidelines. So now you have to have a 720, they updated their overlays.
Wow.
Right?
Wow.
And so Guild has very minimal overlays. So for example, FHA's minimum credit score is a 580, where Guild's is only a 600. Same thing with conventional, except theirs is 620, ours is 620. Right, so there are just a lack of overlays that Guild has, which makes getting people into homes a lot easier and a lot more feasible.
Oh, that is excellent, and I appreciate that response. This has been just amazing, and my mind is blown. It's like those those walls are coming down. The barriers in my mind are coming down, and I hope that same thing is happening for someone who's out there watching. If you're out there and you've had these types of questions just kind of floating around in your mind, and you've been interested in buying but not really sure what the process entails, or how to go about it, and maybe you didn't understand what would be required of you in the process. Hopefully this webinar has answered those questions for you. And if you have any other questions that you would love for us to take some time and answer, please be sure to reach out. You can certainly reach out. My information is on the screen there. Either him or I would be very glad to help you in this process of becoming a homeowner and stepping into that home of your dreams. So thank you so much for tuning in today. Please stay tuned for more great content from Life in Real Estate that's coming, and take care and be safe.
Yep, thanks.